with Nathan Tucci from Nathan Tucci Trading. Hey, Nathan, how you doing?
Doing wonderful. Thanks for having me on.
You're welcome. How are you doing?
Oh, doing good. The markets are not doing as good today, so it's never fun to see the red numbers start to pile up in your account a little bit. But overall, I can't complain. This has been probably the best 3 to 6 months of trading of my life, so I can't complain too much.
Okay, well, that's pretty good. So you're saying a best 6 month period of your entire life since you started trading?
As far as trading goes.
Okay. Okay. Well, let's talk about that. Yeah, not the best 6 months of your life in general, just as far as trading.
If we have to account for my whole life, then there's some other factors we would need to calculate. But as far as the markets go,
I would hope that the markets don't create the greatest moment of your life. There's other things than trading.
There are.
Yeah.
But yeah, I mean, listen, it's relatively easy to trade when the market goes up almost every single day. I don't know if everyone knows that, but it makes trading a lot easier.
Well, that is actually not true.
Oh, wow. This is
controversy
right off the gate. Okay.
Well, because I've had some conversations with some of my students recently, and they have been getting crushed during this period. And so
now let me ask you this question. Are they getting crushed? Because this is one of my favorite topics. Are they getting crushed because they buy into the idea that things are overbought and topped out and they need to start selling? Or are they just not trading the stocks that are already winning? I mean, these are two of the things I talk about all the time. It simplifies trading quite a bit. There's no such thing as an overbought market. That's number one. And number two, if you want the highest probability of success, trade the stocks that are already winning versus trying to get very fancy and find some nuanced, undervalued stock.
Yeah. Well, in this case, I would say it would be neither, probably just total lack of understanding and just bad luck.
Bad luck? Are you going to blame it on luck? Wow.
Well, if you don't know what you're doing and you're just going crazy, then I guess that's not luck. That's just inexperience and not knowing what you're doing. So, okay, well, let's talk about it. So rather than just making a kind of a lame comment where you say it's easy to make money in an up market, don't do that again. Let's hear about what you're actually doing and what's so great about it.
Well, I mean, my whole point is that I'm not that great. It's just the market is making it easier. But you said I'm not allowed to say that. So I guess.
Yeah. So what's the secret sauce other than the market is just so easy and everyone can make money in an up market?
Well, for one thing, the largest position that I'm holding is the QQQ. So my largest current holding is a broad market holding, and the QQQ has been extremely bullish for the last 6 months. And so, just that alone has made a big impact on my overall account. But just kind of looking at the other stuff that I have some GE, I have NVIDIA, I have CCJ, which is a nuclear stock that I like, AJG. I've been adding to my gold position a lot recently. And then I have a whole slew of dividend stocks, and almost all of them have been going up. So I'm trying not to fall back into the trap of saying that they've mostly just gone up, but that has certainly helped when I say I've had a really good 6 months. A lot of that is not from actively managing. It's from most of them just trending upward on the buy and hold side.
Okay. So I would agree with you then that the market has definitely helped you out a lot. So good. Now, would you say that you're going to change your strategy when the market is different? Like, you had a strong bias when you made these decisions that we were getting ready to go into really bullish time. Both you and I had discussed that, and we were both in agreement that we were going to hit a bull run, and we were both right. So we're amazing. So you made these decisions with the mindset that we were going to have this bull market.
Yeah. Yeah. And I mean, I thought that for a lot of reasons. But if you boil it and simplify it down, I'm probably what most people would call a momentum trader. I'm trying just to follow the market, not predict the market as much. And so one of the easy things that I do is I just look at the weekly closes. If you look at, pretty much every stock that I'm holding, I bought in after a strong bullish close on a weekly chart. when the market was already confirmed in an uptrend. And so, again, just boiling it down to the simplest answer of why I've had the bias and why I've traded the specific stocks, it's been, basically a technical confirmation of following where the market is going already. And I'm a big believer in that, there's no such thing as an overbought market. The market will, keep going up far beyond people realize, as long as there's still buying pressure, holding it. And I think a lot of people have failed to realize that lesson. It's still kind of fun to talk about, the market's toppy, or there's this undervalued stock, or whatever the case may be. But, the same people talked about how Apple was overbought 12 years ago and it hit its peak, all the way back then, or Microsoft, or any of these stocks. And then you fast forward, and if you could have owned Apple the last 10 years, or one of the undervalued stocks at the same time, which one would you be better off holding the last 10 years? Apple, the stock that was, considered overbought by most people. So that's something that I'm not worried about buying stocks at all-time highs. I don't mind buying stocks at all-time highs. When the market shifts, when there's an actual different confirmation bias, then I would shift and trade a different direction.
Got it. Right. Okay. Well, so let's talk a little bit about the actual results that you've had, because you started out with a pretty strong claim saying that this was your best ever. So talk a little bit about that and what that actually means maybe for your future trading.
Yeah, well, just for context, I think one thing I should point out, another piece of the trading equation that I'm a big believer in, is that you have a portfolio-based approach and then you have a trading-based approach, and they exist separately. And for me, my trading-based approach is mostly smaller accounts, and then my portfolio-based approach is where I have the majority of my money. And one of the questions I often get when I say Nvidia's flying, and I was right on Nvidia, so I made some money there, and I took advantage of some BITO options, and I was right about that. And I have these kind of trading parts that I've taken advantage of. People often will ask, well, aren't you missing out because all of your significant portfolio is in these, quote unquote, more boring stocks in the buy and hold side? And my answer is no. The beauty of options for me is that I actually can have a relatively small account and still not miss out on all the potential. I can go after, significant gains with a smaller account. Because when I make, 150% on BITO, I do recognize that I could also lose 100% the next day. And I don't want to expose my entire portfolio to that. And so just to kind of bring that full circle, I shared in a recent article, year to date, I have one account that has $339,000 in it, and I was up about 20K year to date, which I'm very happy with.
Is that the buy and hold type strategy?
Yeah. So that's the biggest account that I have, and it's up.
What's that ROI on that? What's that percent? Like 20%?
Well, no, it's only about 8% right now.
Okay.
But I should say that I did get the money transferred to that February 10th, so it's really about a month, not year to date. But
okay.
But I was making the point that if I make 5% a month in a buy and hold account, that would be, phenomenal performance, and I would never complain. But in that all-in account I shared, I started the year at $21,000 in that options account, and it was up into $55,000. So I was up over $30,000 on a $21,000 account, and I was up $20,000 on a $340,000 account. And so the point I was making is, listen, you can go after big aggressive gains without having to expose all your capital to the trading risks. And that's something that I really think people have to be careful of, because they often follow people like you or me. And most of the time we talk about trading, not investing, because, trading is, number one, what most people want to hear about. Number two, it's the thing that actually requires active updates and management. So it's what requires more talking and more time. And I think some people get the idea that means, all of everything you do is active trading. And so I just like to be clear that, that's a smaller portion of what I do, but it still makes up for a larger portion of the opportunity if you're winning and the markets are going well.
Right. Okay. But then again, too, I would say that, and you can comment on this. We'll see. But the long-term account where you're, maybe we would call that investing, retirement type stuff, that will suffer in a bear market.
Yeah.
However, if you're actively trading in a bear market, you could still continue to make money in that area while maybe your buy and hold account is not doing as well.
Yeah, absolutely. And I would say that's true in a bull market as well, except for your investment account's probably not losing money. It's just gaining much more slowly. So I still think the disparity of when your active trading is doing well is significant. And the way that I would approach it is, if I have, $30,000 or $40,000 in an active options account and I double it, then I'll take 20 off and move it into the investment portfolio. And that works in both a bull market and a bear market. In a bull market, I'm just taking off risk. In a bear market, I'm cost averaging my investment portfolio by bringing active profits into it. And then that helps with drawdown and rebounds. So I personally think the same logic can apply in both markets.
Yeah. Now, with the current run that we're on, you said this week was a little rough. We've had a pullback. It's still been remarkable. However, how will you adjust if the market changes? What's your strategy with that?
Yeah, well, I guess two parts to that. Number one, I probably will just trade less in an official bear market. I will still actively trade, but probably not as aggressively as in a bull market. And the reason for that for me is pretty straightforward. I think that you shouldn't ignore the fact that the majority of time stocks do go up. And I think that is a fairly big barrier to overcome that most people don't put a lot of weight into. But when the market is soft, I would just trade less as one, kind of critical piece of the equation. But the other piece is that I would wait for the broad market to confirm a bearish trend, which for me would just be, a weekly chart. I'm not going to ignore the macro pieces as well, but just technically speaking, when it is confirmed bearish on a weekly chart, then I'll just look for the weakest sectors and play those to the downside. And for me, playing those to the downside is not typically going to be big directional trades. I'm not going to buy expensive in the money puts and try to hit 500% wins most of the time. I'm going to do put debit spreads and things like that just require little to no movement to the downside, because a lot of times in a bear market, you'll see 1 or 2 days of super aggressive bearish moves, and then you'll see a lot of grinding sideways. And big bear markets over even if they last a year, if you actually look at it, most of the movement happens in a handful of days.
Right. Yeah. And some of those bear markets, especially recently, they don't last too long. So let's actually talk about that a little bit. I know you've been involved in trading and for quite some time now. But at what point did you really get serious about it, and really start putting a lot of effort into your trading?
I guess I probably had spurts of feeling really motivated and serious for 12 years. It's funny because when I first met you and first started getting into trading, I got incredibly excited about it, like I think a lot of new people do. And I was at kind of all-time high excitement, interest, spending a lot of time on it. And then you get beat up a little bit, and it pulls your attention and focus off of trading. And then you get kind of motivated again. And so I've definitely gone through some ebbs and flows like that. But in 2020, watching how the market responded to just the craziness and kind of how the opportunity was sitting there, and saying to myself, this is an opportunity that if I was more actively managing my portfolio, I feel like I could have done really well. And then month after month after month, I was trading a little bit here and there, but I wasn't really tapping in and taking advantage, feeling like I was missing opportunity by not being more active and more managed. I just got, I kind of took those gradual steps. And then 2022 happened. And like I said, I wasn't very active. It was mainly a bear market. So I just kind of let my portfolio shrink a little bit. I moved a little bit of money to cash. except for there was no good interest rates like there are now. So I wasn't really making any money on my cash, unfortunately. And then, as we moved along, I got more and more active. So it's really been a 12-year process of becoming, more motivated, more actively managed. And then just over that course of time, I've had a, kind of an unfair advantage of getting access to so many smart people. And I don't think the average person is able to talk to hedge fund managers and people who have traded in different, environments, and people who have traded through 2000 and 2008 and, made and lost millions and billions of dollars and seen their strategies work. And, in my position, because I work with a whole bunch of really active traders who have great backgrounds, not only can I talk to them, but I can actually see all of their trade alerts. I can see how they perform in different market conditions. I can see the customer feedback of how they're performing. And so I get this insight that's just, not normal for a person to have across literally hundreds of different strategies. And so, over the course of time, I've taken bits and pieces of those and kind of molded them into what I like to do. And over time, decided to kind of make my own version of that, an official, trading strategy with the all-in trades, or an official strategy with my Three Rivers, or whatever the case is, kind of broken them off into specific different strategies that I use across my different accounts.
Yeah, I would definitely say that you've had a lot of access to some brilliant people. And I would say even like just between the two of us, with me being on the podcast, interviewing people, and, having a decent amount of experience myself, between both of us, we've got a lot of contact with some really great traders, which is very similar to maybe someone who actually goes through the official chain of command, where, like, maybe you go to college and get hired by Goldman Sachs or something like that. Your path is not quite like that, but it's very similar to that.
Yeah, I mean, I think the challenge with Goldman Sachs, because some of the Goldman guys I've talked to have said there's kind of two paths. There's the active trading path, which is very rare, that most of them don't get to meet the actual guys who are doing the trading. And then there's the much more common path, which is basically the salesman path. It's just get assets under management, meet for coffee, meet for golf, and get assets under management. You don't even know how to trade a credit spread, but you're managing $1 billion. And so I think, compared to those guys, honestly, we've had a huge advantage because we've got to meet some people who have really, done trading at a high level, and in their own accounts, and for millions of dollars, which is very different than just, I know how the overall market works because I was managing a portfolio.
Right. So this is pretty interesting. So you've basically said you've been dabbling a lot, but you just got serious literally 6 months ago, and it's been the best 6 months you've ever had.
Well,
that's pretty interesting.
I didn't get serious 6 months ago. I got serious 12 years ago. And then I got unserious a couple times.
But you haven't been this is like maybe the most consistent you've ever been.
This is probably the most consistent I've ever been. Yeah. I would say that's true.
Yeah. So, like, for example, 2020, what did you go through in 2020? You got serious for a while. Did you have a good year in 2020?
Yeah, I had a good year in 2020, but it was mostly on the buy and hold side, the broad market side. I wasn't nearly as active as I would have liked to have been. And I think, also, this is not an excuse, but, 2020 was probably the busiest year of my career too. So it was kind of hard, even to carve away the time. And, like at the end of 2022, where, I was getting more and more active, it was also a time in our business that was actually slow. And so that wasn't great for business, but it was kind of good for trading to be able to dedicate the extra time and really get invested and motivated. And then throughout 2023, I was just getting, more and more active, pulling more of my funds into my own, active brokerage accounts instead of just the buy and hold accounts, to the point now where, everything I have except for a couple of my kids' like future accounts is in my own active, brokerage account. So that's been definitely a journey over the last couple of years.
So when you mention your kids, do you open up accounts for each of your kids?
Yeah, so they just each have a little. The app's called Wealthfront. Wealthfront's just one of those robo management apps, but you can do an investment account where you can buy stocks directly, and so they let you, kind of have sub accounts in there. So I just have a sub account with each kid's name, and they own a couple things. I start with like $50, and they each own a couple things in there. And the idea is just to, number one, give them something that they'll have 20 years from now, that will hopefully be worth, more than it is now. And then also just to kind of teach them how it works. My oldest daughter's really into it, but of course she does want to, take out the money and spend it every time I show her what she's
right
at right now.
Yeah.
So.
Yeah. So with that being said, I wasn't even planning on going this direction, but you brought it up. So I saw this guy on Twitter and he was like, yeah, my son's account is at 100 grand. And then he went ... and he's 5. Right. And so then a lot of people really commented on that and said, oh, great job, but then he made a comment afterwards and he said, and he's only going to get it if X. Right. So he has which I thought was pretty interesting because he's preparing for his son, which I thought was great. But then he's going to have a list of requirements that is going to have to happen in order for him to get that money. Have you thought of anything in that area as well?
I don't think I have a list of official requirements. It's probably not a bad idea. What we do have is a doubling plan. So the way it works with my kids is that when they're 12, anything they have saved, I'll double. And then when they're 16, I'll double it again. So the idea is, if you have $1,000 when you're 12, you'll get 2,000, and then you save it up, and then you have 3,500 when you're 16, then you'll have 7,000 because I'll double it again. And, just trying to incentivize them to save instead of spend and build their account. So far, I haven't been very effective.
Well, that's really critical, is learning. It's kind of like that delayed gratification, learning to put some money away. I'm a big believer that everybody should put at least 10%, give 10% and save 10%, and not necessarily save it because, as you know, that's like lighting your money on fire, but investing. Because, I bring it back. I share this story all the time, but when I was in the Army, and you could probably experience something similar when you were in college, but when I'm in the Army, I'm living with all these young guys and everybody was living to paycheck, right? As soon as they would get that paycheck, it was like it was their duty to spend it, right? They get free food, yet they're going to the restaurant every night. They're buying DVDs, VCRs, furniture, even though all that stuff is provided. Whereas I don't know why, I was just blessed, very fortunate. I was just tucking it all away, right? And then when I left the military 4 years later, I had a lot of money, whereas everybody else was dead broke.
Yeah. Well, you have the privilege of knowing my dad, so you probably are well aware that I was not raised in a way that would suggest spending all your money is a good idea, or living frivolously is acceptable in any way. So I had a pretty good background for not going down that road. And one of the tenets that's been proven over and over and over again, is if you don't learn to save 10 cents out of a dollar and give 10 cents out of a dollar, you're not going to save 100,000 and give 100,000 when you make $1 million. And so I think that's really important, that people don't think, I will do that as soon as I make some money, but they start that practice now.
Yeah, that's actually a myth, and it's not true. And if you believe it, you're believing a lie.
Yeah, but people say that, oh, when I make my $1 million, then I'll give some money away, or I'll do X, Y, and Z. But it's just proven over time that's not how people operate.
The reason why is because most people, when they make more money, they're spending more and they get themselves into a difficult situation financially. I mean, we've heard of the stories about the athletes that are broke, right? Yeah. And that are bankrupt and have no money because they never really had that solid money management foundation. And so I think that's a big part of trading. If you can't manage your finances, you're not going to be a good trader.
Yeah, for sure.
Yeah. So, well, that's pretty interesting. So, and just to switch topics here, I know that you're pretty aggressive, right? Especially now with your smaller accounts. With your long-term accounts, you're more conservative, but you have a chunk of money you're pretty aggressive with, and you had a strategy which you called the all-in trade. Talk about that a little bit.
Yeah. Well, let me first talk about the aggressive part because I am too aggressive.
Yeah, me too. That's what we both have that problem.
So that's why I had to build the idea of separating accounts, is because I know that I'm too aggressive. As a matter of fact, I'll go back. I don't know, maybe 2019. I was on a pretty good, more active trading streak, but almost all of my capital was in an account that I was being very aggressive with. And I think you remember I lost like almost the entire account on one trade on Google. And so, that wasn't fun.
What was the trade, by the way?
I shorted Google, and it was maybe 2019 or something, and it was on options. And then I would have been right if the trade lasted 6 months, like many people have that experience, but it lasted 4 months, right? So I'm sure millions of people have had that experience of,
That's
I would
why
have been
options
right,
are riskier.
but yeah. But I think since that time, number one, I've gotten a lot just better about trading, and I've really taken advantage of some of those connections that I've had for 12 years, but actually decided to listen, which I also recommend to people. It tends to be a good idea. Even if you think you're smart, like I think
What
I'm
you're
smart.
saying, that you should utilize some wisdom from people that have gone before you.
Yeah. Sometimes I think I'm really smart, and then I ignore people who have 20 more years of life experience than me, and who knew that's actually not a great idea. So
you don't figure that out till you get a little experience, I think.
Yeah. So it took. I think I lost like 70 grand on that one Google trade, and so that that teaches you a lesson.
Ouchie.
So two things. Number one, I think I've just gotten a lot better since then. I really tapped into some of the resources, and kind of blended, their ideas into my own strategies. But number two, I just created a system where I can be aggressive because I believe in being aggressive. I actually think it's great to be aggressive if you do it in the right context, and then you manage that aggression in the right way. I mean, we always like to talk about the Vanderbilt story, right? He saw an opportunity, he sold every ship he owned, and then he went all in on railroads, and he became the richest man in the world in pretty quick
Hence
time.
your all-in strategy.
That's my all-in strategy.
Yeah.
But I'm not quite as brave as Vanderbilt. So I said, let me do all in with 10 grand instead of my, entire.
So next year, when this account hits 100K, then you just go all in with that or something else.
Well, what I'll do, It's funny, if the account hits 100K, I'm going to close it, and then I'm going to go all in with like 25K, and I'm going to pull 75 out and put it in, my longer term account. So that, that's the idea.
Well, that's going to take you a little longer to get to $1 million.
Well, kind of. I mean, in one sense, yes, but in the other sense, if 25 goes to 250, and then I pull 150 from that, and now my long-term account's at 700,000 between those two deposits, I'm getting pretty close.
So your all-in started with 10K, and you were trying to do 100K with it.
I was trying to turn 10K into
55.
I'm not at 55. I'm at 51 as of today because Bitcoin pulled back to like 68K, and that's been my biggest position. But the idea was, and there's a whole report in my Telegram you can read because I explain my thought process, which is, number one, I don't really believe in diversification as a general idea anyway. Not that you shouldn't have different things in different like.
So you are diversified though, because you have a trading account and a long-term account,
right.
But you're saying, why don't you believe in diversification?
So diversification of strategy and even diversification of sector to a certain point, I think does make sense. Diversification in the old school, hey, just own a little bit of everything, own some what they call risk parity assets, and that'll help you out when the market goes down, I think is a really horrible strategy, quite frankly. And people should know this. In 2022, your risk parity assets, your bonds and your gold, didn't do anything. You got 10% of your account is in risk parity. It's supposed to help buoy the other 90% of your account, which is not going to happen anyway. And then it goes down anyway. So it's like you just lose on both the whole time.
So when you're trusting your financial planners, and that's how they're trained, they're like, financial planners, they train them to do that. That's what you're getting.
Yeah. So, I mean, for me, if I'm going to do like a real hedge, then I would buy leverage puts like TQQQ puts, and put 10% of your account. If you don't mind losing 10% of your account on a hedge, do a real hedge for the market. Don't buy bonds and gold. Now, granted, I like gold right now for a directional trade, just not as an overall hedge. But anyway, I want to do the all-in account. Number one, I don't really believe in diversification. Number two, the risk to reward when you're playing the long term like that, I actually think can favor options, not in all situations, but in situations where, you know, you're making a directional play for a larger gain and you think the time span is smaller. So for example, I think Bitcoin was going to go from 30K to 100K in like a year and a half or less, not like 30 years. It's not like I was trying to redo the Coca-Cola investment of 1950. In that case, you know, buy shares, hope for splits. This was actually a relatively short time frame that I was targeting, and nothing beats options when it's a smaller time frame. And of course, the third part is I was willing to lose the 10K. If I lost 10K, I was fine with that going in. I knew that was a very high possibility going in. And just to me, the opportunity to lose 10K, but to make 100K if everything went right was a worthwhile risk to reward for me to take.
Now you put in 10K, you're almost halfway, you're over halfway. So is there a risk management plan in case, like, do you have profit locked in case everything just goes crazy right now?
Right now I have zero profit locked in.
Okay.
However, there is a plan. So the plan is to do a quarterly update on the portfolio. For one thing, it just will need rebalanced. So for example, of the 50K I have right now, 2 of the stocks are still break even. So I've made zero money on 2 of them, and which is kind of amazing.
It kind of leans towards the value of diversification, though, because if you would have picked one and then the one would have been the wrong one,
sure,
then you would be flat, right? So yeah. Diversification in this case did pay off.
Yeah, and I mean, this was very purposeful diversification and very limited diversification, which I think does make sense. I just don't think broad mutual fund kind of diversification typically makes much sense. But for one thing, I'll definitely need to rebalance it. So I'm gonna plan on rebalancing it in April, and I won't rebalance to exactly even because again, I think having a bias is okay, and putting more eggs in one basket makes sense for an aggressive directional strategy. But I also don't want to be totally out of balance so that if my other, trades are on the move, that I get enough benefit from it. Because from my standpoint is, I tell people this all the time, if I don't believe in it enough to not put any weight in it, then I should just close it and move it to something I do believe in. It's very funny. I'll have people, like, I'm on a webinar and they'll chat me like, hey, I really don't like this trade, but I'm hoping it can turn around. And I'm thinking, listen, the moment you say, like, I wouldn't buy this stock again today, just close it. Like, you shouldn't have capital tied up in a thing that the only reason you're holding is because you happened to buy it before. There's nothing about it that would make you buy it again. Close it. And so that's also something that I'll do in that portfolio.
Yeah. And I would say each one of those circumstances is probably a little bit different. But yeah, it's trading 101 is close something and put it into something that's moving in the direction. And unfortunately, sometimes when that happens, then the time you switch it over and then it stops moving. And that's no good either. But a great example of that with me is two trades that I've done really well on this year. And initially they didn't go so well. The first one is Coinbase. Mm-hmm. And this was more of a long-term investment, but I got in shortly after the IPO. $300 and some is what like $330 was my initial buy-in. Mm-hmm. But then I just kept adding to it, every month, buy. The thing went all the way from $330 down to $30. And so if you look at that, that's a really bad trade. However, I had a feeling that when crypto turned around, Coinbase would do well. And so I just kept doing it. And I got my average shares to about $50. Mm-hmm. And it turned out to be like one of my best trades.
Yeah. Yeah. Well, the same thing kind of happened to me. Most people don't even know this about the all-in portfolio, but the first options I bought were actually on Mara, not BITO. By the time I published it, I'd already switched it. So most people weren't aware that the first trade was actually Mara.
I thought you went BITO, then Mara, then back to BITO. Didn't you do that?
Well, maybe originally. I think in that account, my first one was Mara. I'm not 100% sure.
Yeah.
I think
that's what I did. I went from BITO to Mara, and then now I'm stuck with Mara.
I think my first one was Mara. But what happened was on the original pop to 50K, Mara was lagging way behind BITO. And so I flipped all the, I was still up nicely, but not nearly as much as I could have been. So I flipped it all to BITO. And people told me, listen, you're going to miss out on potential because Mara could move further. And they're 100% correct. Just look at MSTR, the winning example of Mara. If I would have done MSTR, I would be up insane.
You would have hit your 100K by now.
I would have hit my 100K. So
why didn't you do that? You knew MicroStrategy was the way to go.
Well, here's why. Because people said, hey, you're going to miss out if you do BITO because it's just going to track. It's not going to get the exponential return of Mara. And they are 100% correct. Now, Mara went down, but the concept is 100% correct. But I believed in Bitcoin. I didn't have a belief about Mara as a stock. I had a belief about Bitcoin. And so I wanted to make my bet completely relative to Bitcoin and not even take any risk that if Bitcoin does what I think it would, then I would lose money. Because imagine Bitcoin going to 100K, exactly like I predicted, and me putting my money where my mouth was on the all-in trade and then losing money, even with my pick being exactly right. That would be too painful to handle. So I switched to make sure that I was completely correlated to the pick that I really believed in, which was based on Bitcoin, not based on Mara stock.
Yeah. And so that was a great trade. And, I'm purposely not going to give any information about your all-in trade so that people will have to go and get it themselves. So I do want everyone listening to go get it. We'll give the link at the end of the broadcast, but it's a great report that is amazing. And so are you going to do another one like that next year?
Yeah, I mean, if I hit my goal, I'm definitely going to take some profits off and then relaunch it with probably a set of 3 or 4 new trades that are kind of diversified in their own way. The idea here was several directional trades and then one thing that I call a hybrid hedge. And a hybrid hedge to me is something that hedges you against certain situations, but it's not meant to just go down if everything else goes up. It's not meant to be a guaranteed loser like TQQQ would be if you bought puts on that. It's meant to be a hedge against certain situations, inflation, so on and so forth, but it could still, win at the end, not just pull money out of your account. So that was the idea. And I would do the same thing again. I would get a couple things that I have a high confidence directionally, and then one of those hybrid hedges worked in as well.
Okay. So, yeah, that's pretty good stuff. I think it's pretty cool that you've had that experience with this year. And, part of that is the timing of it. It's really important to time things, right? And so when you're preparing like an all-in trade, how much research do you do on the front end, and how do you try to find something that you think is really going to take off? Because that, I feel like, is the hard part.
Yeah. Well, the Bitcoin was the one I had the most research into. I had a general idea that Bitcoin was going to rebound because we've seen the cyclical nature of Bitcoin thus far. But then as I began reading about the halving cycles and all of that kind of stuff and the supply and demand, and all of that, I just really built up a high confidence that Bitcoin was going to have another rally. And I wasn't sure my timing, would be exactly right. I was willing to, be 6 months too early, which I think you have to be willing to be too early on some of these if you want to take advantage of them, at a price that you like. You have to be willing to be too early. But that one, I had a lot of research and had really just built up high confidence to the point that I actually didn't just do the all-in account. I put a lot more into Bitcoin than just that overall. But I had built up a really high confidence for that one. One of them was given to me by you, that after you showed me your research and then I did a little more on it, I included that one because I wanted to do something on the retail side. I already knew that I wanted to do something on retail. My logic is explained in the report, so you can read it. But the idea is that I think that COVID in 2020, where people kind of became more independent, they kind of built their own businesses on the side. The age of the internet exploded. I don't think that was just a side effect of COVID. I think it was a look into the future of how more businesses will run. And so the retail trade in there is a play on that. It's basically saying, hey, we're still in the early age of everyone running their own business.
And I'm not going to say what that is, but I will say that it's pulling back and it could be in a bounce position.
Yeah. At one point, what's crazy is at one point that trade was my biggest one. It had surpassed BITO for a little bit of time, but then Bitcoin took off again.
Right.
And then there's another one in there, which is the hybrid hedge, which is my worst pick of the bunch. And I almost did a different one in the same sector, But I did a little extra research, and you know what I did? I actually, I broke one of my own rules.
I'm shocked that you would do that.
I know.
You never break rules. You're such a strict rule follower.
I know that. I know that.
Yeah.
You're very shocked. But what I did was I took the one that I thought had more value. I thought this one is a little underpriced. It has more value, instead of just taking the one that had the most momentum. And that was a big mistake. Because
go with momentum every time, buddy.
Well, I say it all the time. I say, if you want to pick a stock that you think can win in the sector, pick the one that's already winning. And then I got, what I would say too cute. I got too cute and picked a one that I thought, oh, this one's lagging behind.
You became a value investor and a research guy, which, that strategy does work too.
Yeah. So I don't love that pick. It's fine. It's been about break even so far, but it should be up nicely. So yeah.
Okay. So we're going to close out with a hard question. It's going to take some thought, and I know you're good at thinking on your feet, okay. But you're, and it might not be hard. Maybe it's just hard for me, but you're in the space now where you're trading for yourself, which is awesome. You're doing really well. And you're also in a very unique position where you're giving people advice, right? Mm-hmm. You're helping pave the way for trading, which is a tough thing to do. It's really tough because we know that trading is so difficult. And you have one strategy. It might, all-in trades might be great for you, but for whatever reason, somebody follows it and they just can't figure it out because they have not the experience that you have. So if you were going to, now that you're giving advice more often and you ran into a trader that was maybe 65 and they're working and they have some debt, but no retirement account. And if they are about to retire and they live off Social Security, it's not quite enough, but they really feel like the markets would be the way to go. What advice would you give that particular person?
Go all in on altcoins. No, I'm just kidding. I would not. That's not the advice I would give. That is a hard question. Because I still kind of stand by the original foundation that I started with, which is I think you should have a portfolio before you have an active trading account. I do think that that's probably the most old school belief that I hold, because for the most part, I kind of throw the old school stuff out the window. Not the old school stuff from real traders, but the old school stuff from talking heads about diversification and a lot of that.
Do you consider a financial planner a talking head?
Yeah, I would.
They're not traders.
They're not. They're salesmen.
Yeah.
But so a lot of that I kind of think is nonsense, and I think people have found out that it doesn't work. I mean, I'm sure many people listening have had the experience of talking to a financial advisor, and basically they want to make it sound really complicated, like they have the answers, but it's really complicated. And they want to collect as much assets as they can to get their hands in. Now, when they say it's really complicated, that's true. Trading is difficult and it's really complicated.
It is.
But what they're doing is not complicated at all, because they're basically buying a couple of Vanguard funds.
And not only that, they have a template, right? Especially the guys that are working for, the banks or whatever, they have an exact template that they're required to follow.
Yeah. So they're right that real trading is complicated. It's just kind of ironic that what they're doing is actually not complicated at all. But anyway, that bashing aside, I do think having a real portfolio it is still a good fundamental step. I think trading should be an extension of that. I also, by the way, think that you do learn from your portfolio, and then you can transition some of what you learn from your portfolio into active trading. For example, when you're holding some energy stocks, and you're holding some tech stocks, and you're holding some basic material stocks, and you watch how they react in different market conditions, you start to realize, oh man, energy is actually a pretty good hedge against inflation, because as the cost of commodities go up, the supply and demand gets out of whack, and energy actually goes up when other things are going down. So you learn that without actually having to risk money on an option when you have a buy and hold portfolio. And I think that's actually very valuable. So for me, I guess a long way around this answer, I would still start with a portfolio. I would start with dividend stocks that have grown and have increased their dividend payment for 20 plus years or more, and start seeing your account actually grow, and start seeing deposits actually hit your account, and get used to what it feels like to generate profits from your money and having your money work for you. And then I would pull pieces off for an active trading that you keep very separate and secluded, and you don't chase losing trades with more money from your portfolio.
Okay. Oh, you know what? That's actually excellent. And it's you took a while to answer it, and it's probably not a complete answer because that's a difficult question. So just to dive into it a little more, I would say one of the things that I really value is multiple streams of revenue. Mm-hmm. And so if you're in that situation and you're still working and you want to retire, you draw that Social Security, that's one form of revenue. Continue to work a little bit, that's your revenue. Try to get a third source of revenue from trading or investing, and just, take the revenue that you're making in one and then roll it into another, because that's what I'm doing. It's what you're doing. Like, I've got financial products and educational courses that I'm selling. I've got trading, right? And then I have my podcast, and I've got a book that I just released, which is a different source of revenue. So, by the way, I'll put the book in the description, get it, take a look at it. It's pretty good. Leave me a review. So just take some of those revenue streams and then roll them into others, and then you get the compounding snowball effect.
Yeah. Well, since you mentioned the situation, the multiple streams and the working, I have to get up on the soapbox that people hate, but they hate hearing this, but I have to tell people because I see it a lot. And that's basically when someone says, hey, I have a $500 account and I want to use trading to make extra income. And that's fine if you're just building if you're just practicing, if you're just building and you're starting somewhere, I think that's great. But if you think that a $500 account is the best way for you to add a stream of income, I would say that's a really bad idea. And the reason is very simple. If you have a 100% return on your $500 account in a year, which, 100% return would be better than almost anyone in the world can get, then you'd make $500 in a year. And if you just bag groceries for a couple hours every week, you'll probably make like several $1,000s in a year. And you'll be able to, increase the amount of capital much more quickly through almost any other stream of income than increasing your capital until you hit a certain tipping point. So I always like to.
Okay. So you're saying, and I quote, do not try to day trade to make money. Is that what you're saying?
No, I'm saying the compounding interest and the power of letting your money work for you is one of the most powerful forces in the world, but there's a tipping point. It's not more powerful than bagging groceries until a point in your account.
Right.
That's the most important factor of compounding interest is time and the amount of capital. And if you don't have the amount of capital, then the time is exponentially elongated. And so I think a lot of people make the mistake of thinking they're going to spend hours and hours a day trading, and they're trading off of a capital amount that's too small to actually get the benefit of their hard effort. When if they, got a job or some other side hustle and did that for 2 years first, then they could have 30,000 in their account, and then they would have a more meaningful amount of capital to actually benefit from.
Well, that's pretty cool that you bring that up, because it's a very common misconception, right? And it's the reason why a lot of people get into trading and they don't do so well, because they think that they're going to have a lot of success. They're trying to solve a real financial problem. And that scenario that I gave you was a financial problem. And they think that trading is going to be a relief of that financial problem, which it very well could be, but it's going to take a lot more work than what they think. The reality is day trading is a definite way to make a very high income, but most people don't have the skill or have the time or the discipline or the ability to generate that income. And even if they become amazing day traders and could make, $20,000 a day, even if they can do that, they're still better off taking that money and rolling it into something, because the compounding effect is still going to be better than if they're day trading on a regular basis.
Yep.
Yeah. Yeah. Because I know of a young guy right now that's doing pretty well day trading. He doesn't have a large account, but he's making, $50 to $100 a day, which is pretty good money. you could replace a job. And he's taking withdrawals off of that, which is good, but it's still, unless he's got a scaling plan and a reinvesting plan, it's not going to get him anywhere.
Yep.
Yeah. So interesting topic. Okay. So with that being said, I think this was pretty interesting, and you dropped some great wisdom and insight. Do you have any hot tips? What are you thinking? What are you looking at right now?
Well, I am getting more and more energy in my portfolio right now, because I do think that the energy sector is a great, kind of defense against rates staying higher for longer than people expected, and just some fear entering the market. And there's a little bit of a wild card with energy, which is, for the next 11 months, well, I guess for the next 8 months for now, it's kind of a hedge against, rates being higher and all that kind of stuff. And then if Trump were to win the election, those energy stocks are probably going to do phenomenally well on the back of that. So it's kind of a wild card there as a catalyst.
It's nice to have a trade idea that has a potential catalyst that could generate it higher. Like I had mentioned to you recently about an altcoin that I'm looking at, which is Bone. It's on the Ethereum chain. They could be listed on a major exchange, which is a catalyst that could spike it. So you're like hoping that this thing happens. You don't know if it's going to happen, but it's a catalyst that could. And but here's the thing about energy that I just wanted to interject, because we know as traders that supply and demand is really powerful, right? That's why Bitcoin is so amazing, is because the demand is hungry for it. But another industry that I really like is chips, right? Anything in the chip, that's why we've seen NVIDIA. But energy is also, because what's happening is the world, and this is why I like Shopify and retail stuff too, because the world is getting very hungry for energy, right? Because there's electric cars, that's one facet of it, but there's technology, there's globalization, and technology is improving on a global scale. And we even look at crypto, Bitcoin's so energy hungry, right? The world is getting to a place where the demand for energy is going to be so insane that the people that are producing that energy are not going to be able to keep up with it.
Yeah, I mean, they're already getting to that point. And so actually, if you look at the last month, energy was lagging behind most of the sectors. It was lagging behind tech and communications and industrials and several others. Over the last month, it's flipped to the number one sector right now, leading all other sectors over the last month. So we're starting to see that momentum really pick up in the energy markets right now. And I think that could be the very tip of the iceberg. Now, I'm not guaranteeing, energy is not typically a high momentum sector anyway. So I'm not saying
it's slow and cumbersome.
Yeah.
And it's big, it's expensive to get involved in energy. You've got these big billion-dollar companies like ExxonMobil, right?
Yeah.
They make a ton of money, but they're so big and they have a really big
and most of them pay a big dividend, which then, comes off the top line of the growth stock as well. So so I'm not sitting here saying, energy stocks are going to double in the next 8 months, but I do think they're starting to lead the charge. They're picking up momentum. People kind of view them as a safer asset to flight to, especially because, again, many pay dividends. And the Trump factor is kind of a wild card that could really accelerate a lot of the growth, especially, in the natural gas, coal, and oil energy stocks.
So let's talk about energy a little bit more, and then I will let you get going. But I feel like the demand could be so heavy that it is a possibility that energy could at some point become like a tech stock, because I feel like the demand, I just see my energy bills, even my electric bill has doubled. And so if there's a disruption in the industry, if there's a new energy tech or something like that, that could really be high flying. And so how do you keep a track on that? Do you see any disruption or any new tech or anything? I know that nuclear is supposed to be really big
I think
right
it
now.
already exists. I think nuclear already exists. I think nuclear already does every single thing everyone wants to hope and dream that energy can do, that some new, discovery can do. I personally think nuclear already does all of it. It just has some really bad press. It has this kind of scary presence
The
to it.
Fukushima meltdown in
Yeah.
Japan.
Well, it's actually, believe it or not, it's one of the safest forms of energy we have.
It's kind of like airplane versus car, right?
It's exactly what it's like. But we got people over the airplane hump, and if we get people over the nuclear hump, I think it will take off. So I don't think Exxon or CVX or any of these stocks are going to transform into chip stocks. But I do think nuclear could transform into chip stocks. I think that's a real.
You got any companies that are big in that area that you're investing in?
Yeah, my number one performing stock right now is CCJ, which is a nuclear stock. So
okay.
Yeah, I
didn't even know that was your number one.
That's my number one performance. It's not my number one holding. I wish it was my number one holding, but it's my number one percentage return in the last year. And CCJ, there's a couple others, but CCJ has been really strong. It's had a recent pullback, so once again, another stock that you could potentially jump into. CCJ. I'm not. Again, this is one of those ones where nuclear could probably just as easily have another bad press moment and crash. Like that's probably equally as likely as it being the next.
And at that point, that's when you buy as a smart investor,
right?
So you're hoping for disaster. Just kidding. Just kidding.
But it's it really is phenomenal. I mean, the naval ships have those smaller nuclear reactors that can run the entire aircraft carrier. And it's
and I know that nuclear submarines have been around for a long time, and they're just so amazing. They stay underwater forever. It's just such a good, cool tech.
So I think the technology is there. People are just scared. It's clean. It's safe. It's so much more powerful than anything else that we have. But it's, people are just kind of scared.
There's a stigma, and for good reason. It is. I mean, I don't understand it. I haven't done a lot of research on but it's definitely can become nasty.
Can I tell you a story, Casey?
Yes, sir. I love stories.
So there was this town in Minnesota that was having a pretty major issue with people running into deer. And they were running into deer so much that it was killing like 300 people a year. Okay. Should I reference that this is a made up story? I think it's based in one real example, but I'm making this up.
Okay.
I feel like I should say that at the beginning.
Yeah, because I thought it was real.
Okay, well, you can pretend it's real. It actually is based on a real story, but my version's made up. But the deer were killing like 300 people a year. And so they kept saying, we got to do something about this. They tried guardrails. They tried all kinds of things. They couldn't get rid of the deer. And they were literally, I mean, you're talking like thousands of wrecks and killing hundreds of people. And so some very smart person came up with a way to solve the deer problem. He said, if we actually release a couple hundred mountain lions into the woods, they're really smart. They're nocturnal. They don't get hit by cars, but they will definitely clear out the deer population. And they actually like the tree line. So they'll keep kind of the deer away from the tree lines. He said, our projections are that if we release these mountain lions, fatal crashes in, deer accidents will drop from 300 to 10 a year. So we could basically cut, those by like 93%. He said the only problem is they might snatch 10 to 15 children out of yards a year. And so what do you think the people did? Did they vote to approve the mountain lions?
You know what? Honestly, that's a hard decision, man, because I think one child is too many.
Yeah.
But then again, you got the 300 people versus the children. So is the child's lives more important than the people's lives? So you're actually saving lives.
Yeah.
So it's a tough decision. It's a really tough decision, but I'd probably go with the mountain lions.
Yeah. Well, the vote was unanimously no mountain lions because the horror of a mountain lion stealing a child is just too overwhelming, even though the basic math says this is a much better solution in terms of total
logic says don't do that. And then just take extra safety precautions for your children.
Right. And I think nuclear is the same way. All the math, everything you stack up on a sheet, it's safer, it's better, everything about it. But the idea of, Fukushima or one of these, what was the one they did the big Netflix documentary in Ukraine? Chernobyl.
Chernobyl, yeah.
Yeah, that idea sits so heavy in people's
And that
minds.
documentary probably didn't help anything.
Yeah. Yeah. Well, there's actually another documentary about nuclear that people can watch that kind of says it's more of a farce and that it was I don't know how to even say that. It was hyperbolic. And not
Hyperbole?
actually, yeah, hyperbolicized. I don't know how to say that.
Yeah.
But there's a kind of a counter documentary that people can watch, and it's kind of interesting as well.
Yeah, well, that's pretty interesting. So you gave us a great tip. I personally don't have a lot of exposure to energy right now. I do have a pretty large holding in ExxonMobil, which I've had for a long time. You know, my dad told me to get into ExxonMobil when it was in its 30s because it was after COVID.
Nice.
And it crashed. And he said, you need to get into ExxonMobil. So I did. And that's been a pretty tremendous trade for me. And I've had it ever since.
That's fantastic.
Yeah.
Well, I like Exxon, but I'm betting on the mountain lions.
Yeah. Well, you know what? Thank you for sharing that with our audience. With that being said, you've given us some great nuggets. I want to just say he's got an amazing Telegram channel, which has actionable tips for completely free, including his all-in report that he posted. How long ago was it that you posted that?
That was November.
In November, and he's already made $50,000 on that report. It's too late for you now, but it's not too late to get some of the stuff that he's doing, and he's posting real stuff. And I just told him that I haven't followed anything on the channel.
You didn't even follow my MSTR trade? Oh.
Don't go on the channel and not follow him like me. Instead, go there because he's getting a lot of great testimonials. But we'll put the link in the description. It's a Telegram channel. There's a free report there. Go check it out. I honestly love that channel. I just have, I've got a lot of other strategies and I check in, so I haven't actually followed it. But you got to go there, follow the strategy. It's just tremendous value and insight. And by the way, you had a poll on there about your minivan, and it looks like your wife won. Your wife won, right? The vote?
Yeah, she did.
How did that happen?
I was shocked. Did you vote?
I did. I voted for you.
Okay. I thought, to be honest, I was ready to show her a landslide victory and tell her how smart I am and how everyone thought it was cool, and then it kind of blew up in my face.
So what ended up happening?
Well, I never showed her the vote, obviously. That's step one.
So you were going to use that as ammo if it went in your favor, and since it didn't, you just didn't even tell her about it?
Of course, yeah.
Smart man.
What else? So, but I still haven't got the van, which she's due any day, so I really need to move. But I have a couple offers out there. I've talked to a couple people, but I don't have the van yet. When I get the van, I will make a Telegram video and show people the van, so they need to know what their hard efforts.
So are you're not going to fix it up like you wanted to do?
Well, the latest is I've actually kind of found an in-between route, which is ones that are pre-done. Like there's that company called Explorer that like does it already. They have like a 30-inch flat screen TV in there and like comfortable chairs. And so they do it,
I was looking at people that did that with like expeditions where they just gutted them and then redid them all. That's a pretty great side business.
Didn't you show me like a 6-door expedition that they had done that on?
I might have. Yeah.
So I think we're going to get like a pre-done vans because I know you don't believe this, but for some reason my wife doesn't trust me to like, wire a van up and make it work. I don't know why.
I mean, you're not necessarily known as like a handyman type guy. You did build a table though, right?
I did build the table.
Do you still have that table?
No. Well, maybe. I did a different one that we have right now. The old one might be around somewhere. I think it's in my brother's garage, actually.
Yeah.
The old one that I did.
Yeah. I had a custom made table, and it's like the greatest thing ever. I had a friend of mine from church build it for me custom. So awesome. Yeah. You could never get something like this in the store.
Yeah, it's great. Oh, I don't know if you read my articles, Casey, but I had another throwback article yesterday. It was about our good friend Sean.
Yeah.
Yeah. Remember my last article about Sean?
Well, you know what? I do because, you said it's just Sean doing Sean things.
Yeah. Well, this one was about people saying things are overbought. So Sean's been texting me for about 2 years now that the market's overbought. And what's funny is he's been
Sounds
saying,
like the perma bears.
yeah, he's been saying Nvidia is overbought since it was like $250. Like, I'm like, I have some Nvidia. He's like, dude, it's so overbought. You're so dumb. Well, then it's funny because then it goes up to like $900 and then it'll fall to like 820, and he'll text me, haha, I told you Nvidia's crashing. And I'm like, dude, do you realize if you would have bought it at 250 when you said it was overbought, you'd still be up 300%?
Yeah.
But you know,
Yeah. Now it could be in a bubble, but here's the thing about Nvidia. They're saying that their growth is still expected to continue at a pretty rapid pace, and their net revenues are like, I think I saw that they were more than Apple's now, and it's pretty awesome. But there was a comparison that somebody sent to me. They were talking about Cisco, and this is before your time. But when I started trading, my first investment was in Cisco. You should go look up the stock if you haven't looked it up. And they were like a networking. They did internet networks, right?
Yeah.
Office networks and stuff. And at the time, they were like the Nvidia. And when 2000 happened and there was the 2000 crash, that stock collapsed and it's never recovered to this day. And yet they still make pretty decent revenue. It's not like it's a trash company.
Yeah.
And it's just an interesting case study. So, I don't think that's going to happen to Nvidia, but something like that could happen.
Yeah, definitely could. I don't have a ton of Nvidia. I'm looking right now. Yeah, I don't know what that quick math. It's not a big chunk of my portfolio, but I think it's, for me, the potential of it continuing is enough to have some exposure to it. I don't think it's a, quote unquote safe bet, but I think the potential, because the idea that we're in a bubble right now goes both ways. Like, in some sense, yes, the way that we moved up, the parabolic, all of that kind of stuff. But in the other sense, the companies are making record profits.
Right.
So, they're, and until they're not making record profits, I think it's hard to, flip and say like, they're just being bought up for no reason.
The perma bears, they have some good points, but you know what? I'm just so bullish on tech. The world has a lot of problems. And there's a lot of bad things in the world. The government, political stuff, it can be ugly. But tech is amazing. And globally, we have a global scale where most of the world doesn't have access to tech.
Yeah.
And that is going to change. And
Yeah,
that
it's
is
changing
going
quickly.
to, those people are going to want tech because tech changes lives. And that is going to fuel a demand. There's going to be such a demand for chips and this high-tech stuff and metaverse stuff. We haven't even talked about metaverse, but I think that's just amazing, the metaverse, because you can get it. You look at like kids that have no education, living in villages where there's no electricity yet. You could get them on the metaverse and get them access to things that they couldn't have access to otherwise.
Yeah. I mean, we could talk about this for hours and hours, but you hear so many interesting ideas about like humanitarian crisis, and sometimes it's connected to the evil of capitalism, but it's just amazing because every study over hundreds of years will show you that if you want to help poverty and health and everything else, give them some money, give them some free markets, and they will do extremely well.
Don't give them money, because money
actually opposite of that.
Yeah.
Don't give them a way to generate money, I should say.
Right. Give them access to the ability to learn and to have education and to creating things is what generates. And I'm the same thing goes with population. Everybody wants population to decrease, that we don't have enough and all that, but that's actually not true either. The technology is providing more. We're making more food now than we ever have with less land because of technology.
Yeah. Well, dude, it sounds like you are reading my articles because I just wrote this. Listen, I got it.
Where are your articles? I'll put a link because I didn't know you had articles. I'm just reading your Telegram.
They're from my e-letter. But my last thing that I will say fundamentally, if you want to know probably what I believe is the most fundamental value investing strategy of all time in the history of the world, it is bet on humans.
Yes.
It's so funny because people acted like India was not going to have a long-term economic win, which is, to me, is just insane. They said the same thing about China 20 years ago. But guess where all the economic growth is? It's where there's people. Now, it doesn't happen overnight because people, it takes time to, first you need some free markets to break in, and then you need people to develop. And then, like you said, they need to get some education. But guess who ends up providing wealth and value? It's human beings. And so if you want to bet on human beings, China, you're a little late on the curve for China, but China, unbelievable. India, and then Indonesia is the next big bet to make. Indonesia has an incredible population. They're already growing faster than almost anywhere in the world.
So what do we get into? Come on, give us another tip.
Well, I'm just saying, do some research on where the populations are, because that is where long-term value will be created. It's not going to be 1 year, 2 year value. It's going to be 20-year, 50-year value.
Yeah. And the big industries are going to benefit from that, like the chips and the energy, and those big companies, they know what they're doing. So yeah. Well, we've already gone past the time. So thanks a lot. Do you have I know you got the Telegram. Anywhere else that you want people to go to find you?
No, if you're in my Telegram, I'll post links to other stuff and how to get different places. So that's kind of the home base for me. If you join Telegram, you'll get access to everything else.
Yep. Okay. Well, we'll put the link for that below. It's a valuable resource. Thanks a lot, Nathan. Hopefully I can talk you into coming back. I know you're so busy now with all your webinars and all that stuff, but maybe if the audience likes this and you get some new subs, maybe you'll come back.
Yeah, I'd love to do it anytime, although the audience probably won't like me, so you probably won't want to have me back. But if they do,
if they buy CCJ, maybe they will like you.
Well, there you go. But thanks for having me. Appreciate it. I'll talk to you later.
All right. That's it for this episode. We'll see you guys next time.